Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today's episode is going to be a little bit different, but before we get into it, remember, this is a GW Investment Institute podcast for entertainment and educational purposes only. We are coming to you from the George Washington University School of Business, Duquesne Hall, Duquesne Family Studio, right here in the heart of Foggy Bottom. Super excited to be talking to you today. So today's episode, we have different versions of the episode. We're trying a new format today, and I think we'll keep it at least for a few times. Love to hear your feedback. So today's episode, we're going to take a broad overview. It's going to be about stocks, so it's not going to be that off base. Something different. But what we're going to talk about are AI stocks, so artificial intelligence stocks. Now, we've talked about a bunch of these stocks on the episode already or on episodes in the past. But today, we're going to have a broad cut. So we're going to talk about some of these companies a little bit more than others. But we're going to talk about a variety of companies that I think, so again, this is hot take, not investment advice, educational, entertainment purposes only. But this is my hot take on the companies that you should be paying attention to with respect to AI. And there's plenty of people out there telling you what to pay attention to. These are some of the companies that we either own or have owned in our portfolios at the GW Investment Institute. And I think as an investor, business person, analyst, these are some of the companies that you should be paying close attention to in the AI game. The AI game is changing fast. And so I think it's pertinent that you stay up to date, that you check out what's happening. And now, as a segment, let's say, as an episode, we're going to bring this to you, and we can refine it. Love to hear your feedback. If you have, put it in the comments. Let us know what would you like to hear about these companies that maybe we're not saying. What questions do you have, and we can get to answering those. All right. So, what are we going to talk about? So, the companies that we're going to talk about. So, I can maybe just give you the companies at the top of the episode here, and then we'll dive into each of them a little bit. So, we're definitely going to be talking about Alphabet, also known as Google. We're going to be talking about Nvidia, maybe seems obvious, our largest holding at the Investment Institute. We're going to be talking about Amazon. We're going to be talking about Microsoft. We're going to be talking about Apple, Tesla, Crowdstrike, Palo Alto. Those are the names, and TSM, Taiwan Semiconductor. And so those are the names that we're going to talk about in the episode. And so we'll dive into each one of those a little bit here so that we can talk about them. We're not talking about the Chinese names today. We'll get to those, but so these are the U.S. AI companies. We'll talk about the Chinese AI companies as well. But on today's episode, it'll be, the U.S. AI companies that I think are worth paying attention to. This is not an exhaustive set, but these are the ones for today's episode. So again, that is going to be Google, Nvidia, Amazon, Microsoft, Crowdstrike, Palo Alto, Apple, Tesla, and Taiwan Semiconductor, in no particular great order there, except we're kicking off with Alphabet here. All right, not in alphabetical order for the otherwise. All right, so let's talk about it. So Alphabet, everybody knows Google. We've talked a lot about this. This is a portfolio holding. It's an important portfolio holding, has been doing well. When you talk about, okay, the year-to-date numbers, it was out of favor for a little while, and people thought, okay, well, ChatGPT is really going to come for it. Now, remember, OpenAI is not a public company. We're not going to talk about that today. We talk about publicly traded companies, the things that we can invest in on the public markets. You can invest in, if you have access to in the private rounds to OpenAI, people are investing in that company. I'm drinking out of the GW Business School mug here. Link up, buy it. Lots of people thought, okay, you have this legal overhang. Google search is going to get killed by OpenAI's ChatGPT, and that's where it's all going. Well, that ended up not happening. The legal situation resolved itself much better than I think people expected. And then you heard Google off to the races here. And we'll talk a little bit about that. But let's look at the numbers for a quick second. Market cap as of December 4th here is $3.82 trillion. So very big company, one of the largest in market cap companies in the world. And the year-to-date number now for 2025, again through December 4th, 2025, is 67%. So it has run super hard. And we'll talk a little bit about the business management, price valuation, and balance sheet, as we typically do when we talk about the companies. So when you talk about the business here, let's go over some of the quick metrics here, right? And some of the updates on the AI. So this business, is still running at nearly 60% gross margins from the latest quarter on 9/30/2025, 59.2, and net margins of 27%. These are terrific margins. Now, take another sip here. We've already talked about this before, but they're investing a lot. They're on track to invest $90 billion for the full year 2025 calendar year. Their fiscal year is also the calendar year. Which is going to leave them free cash flow at $60 billion. That's still a lot of free cash flow. And now let's go back to now focus on the AI piece. On the business side, they have a Google Cloud, which is their cloud version of Microsoft Azure and AWS for Amazon, which we'll talk about a little bit as well. And that business has been growing. And so in that cloud business, they offer that to other clients, obviously, and people can rent out, for example, Nvidia chips and Blackwell as well. But they also have their own chips. And I think this is really important. And again, as a business person, analyst, investor, you should be paying attention to this if you have not already. So what do they have that others don't have, right? So everybody can buy the Nvidia chips and getting, securing capacity there and enough supply is important. But back in 2015, they started building something called tensor processing units. So what are those? Those are what are called ASIC, which is application-specific integrated circuit, and they're doing specific workloads. So the GPU from Nvidia, I'm not an expert here, just trying to explain this as an investor. The GPUs are general purpose graphic processing units, and they can do a variety of different things. And you can use CUDA to help program the way that you want to do. That is the software layer that helps make that even much more powerful moat for Nvidia, that they have the software and the hardware there. But how do you skip over all of that? Well, you really need to have some of your own chips. They started building these chips back in 2015. So tip of the cap here to Google for doing that. And now they're on their 7th generation, which they just announced and launched, called Ironwood. And again, if you haven't been paying attention to this, I encourage you to do that. Because Gemini 3, which is their frontier model, large language model, frontier model, most advanced that they have, and depending on what system that you're using, I'll give my hot take on what I think who's leading. And that is right now, again, Rodney Lake's AI hot take on what models for investment research. I still think Grok leads, then so Grok 4.1, then Gemini 3. I think those are the top two. And I think they really are ahead now of ChatGPT 5.1 and Claude Sonnet. So I think, and even Opus, I think are behind. So I've been using them all. I think Gemini is a big upgrade from 2.5 though. So I do think it is a big move, and I think it's important to be paying attention to that. So again, these are their own chips. I think it's really important to be paying attention to what's happening there. So start doing some of your own research if you haven't done already. Always do your own work. Always have you want to create your own edge. You want to have your own ideas. Not that you're not going to agree or disagree with people. There'll be cases, obviously. Other people own Google. We own Google. It's not new in that sense, but you want to make sure that you have your own understanding. You want to build your own database of understanding for these things. And I do think these companies that have this advantage, like Amazon here, or rather, we'll get to Amazon rather, like Google here with its own TPU is important. And they built Gemini 3.0 with their own chips, right? And so not having access to NVIDIA chips is not going to be an issue for them to keep pushing their models forward. And on the enterprise side, I think it's really important to note that, if you have Google, right, if you have the Office suites, the suite of products that are in the Office, like Google Docs and Google Sheets and Gmail, and it's all integrated, that's going to work better for you as a customer to use Gemini, right? The security piece is going to be a little bit easier to manage for you as an enterprise, and even as an individual. If you have an individual Google account and you're paying for the Pro subscription and you get access to all of these things, that's just going to be easier for you to manage. Also, for your own security, you're not copying and pasting things in and out into a different large language model. So I think there's some big advantages here for Google on the enterprise side, especially, but even including on the individual side, where again, they have their own email, they have their own docs, they have their own photos built in. So a lot of this that's integrated, I think, gives Alphabet, Google a huge advantage over OpenAI. And I would frankly be a little bit concerned. Apparently, there was some code red issued by Sam Altman, the CEO of OpenAI. I don't know if that's true. It's hearsay right now. But if they haven't issued it, they should, because that's my hot take. I think they're well behind now, and they do not have all of this enterprise sort of know-how and clients and setup, and they're losing money, not making money, and Google's making quite a lot of money, even after investing a lot of money. So I think the competition has stepped up now, and I think who would I put as the front runners here? I would put Google out in front at the moment, given their balance sheet, their business, their management, and I really think that if you had to say, like, well, who's gonna dominate? Who can be one of the dominating forces in AI? I think Google is going to absolutely be one of those, and is one right now. And I think they're going to have a tough time others unseating them. All right, well, let's move on to some other names. Maybe come back to Google. But Sundar Pichai, I think, is doing a fantastic job on the management. And then let's visit maybe the valuation here. The balance sheet is excellent before we head to another company. Excuse me. All right, so the valuation, even after this huge run, 67% the year to date, 80% year over year, but you're still looking at a forward of 28 times. So this is not a super expensive company by any means. And you wouldn't say that I think it's at least fairly priced. It may even be undervalued at the moment, given the position they have in the AI world. All right, again, not investment advice. So let's move on to Nvidia. So Nvidia has been, hit a little bit here lately, and so the year-to-date number is only 36%, right? But they've come off, and certainly if you look at, where they've been, people are concerned that Google, right, has their own TPUs, and there's this overcapacity, these deals where they're vendor financing, these lazy Susan deals. OpenAI, issuing this code red, I think it's a concern, for the spend and all the money that has been pledged, 1.4 trillion, for example, on OpenAI. A huge chunk of that's going to obviously be for Nvidia chips. How's that all going to play out? Where are they going to get that money? That obviously has an impact for Nvidia in the short and medium terms, but longer term and medium to long term, Nvidia is still in the driver's seat, right? They're still producing some of the best chips, if not the best chips, and I think they're the best chips on the GPU side. And they're not slowing down. They're not sitting still. Jensen Huang is super focused. He was in Washington yesterday. He is, plenty wealthy. He doesn't need to work anymore, obviously, or maybe it's not obvious, but if you're not paying close attention, he likely doesn't need to work anymore for money. He's trying to move this company to the next level. So their valuation is not quite as good. 38 times is the forward. And on the business side, the metrics still seem very good, but I think that's where some of the sell-off has come, that the metrics for this company are so good that people are worried that they, they're going to have to take a hit to this, especially because, as competitors come in, like the TPUs, and maybe the spend has been overstated on some of these, people like OpenAI, they're going to get hit. So if you look at the gross margin, 70% on the gross margin side and 52% on the net margin side, people are concerned about that they're going to come in. But they're continuing to invest. They're not investing as heavily as these other companies, but they're 5.7 billion for the year, and they're going to have 97 billion in free cash flow, and so nearly 100 billion of free cash flow for the full year 26. Theirs is not calendar year, but theirs is January 31st, and so 5.7 billion, not an inconsequential number, but certainly not the nearly 100 billion that some of these other companies like Google, Alphabet are doing, but 100 billion nearly and free cash flow. And so I think they're still super consequential. I think they're still at the top of the league table here, and pure play or pure play AI and not OpenAI. I think it's an issue with OpenAI with them. All right, so let's move on to Amazon. We're just going to try again touch a bunch of different companies here that I think are relevant in the AI space. All right, another sip of water from my trusty mug here. All right, so Amazon. Amazon, I also think, is in a unique position because they're building some of their own chips, the Trainium chips. The year-to-date number, they have not been up a lot, 3.9%. And if you look at their valuation, 26 times, is the forward PE. So, it looks like, people have not been appreciating them. And certainly, AWS is one of the big players in cloud, sort of the OG in that world. still is a third of the market, and now has been rolling out. If you watch their conference, they're rolling out new options for their clients to have dedicated LLM models for themselves. And so, why is that important? Excuse me, because if a client is using a general LLM to create some type of advantage, well, that's going to be commoditized, and lots of other people are going to have that. So they're working on helping clients create customized LLMs for them to do whatever task that they want to do to help them be distinguished and unique. So we'll have to see how that all turns out. I think it's worth paying attention to that piece from the AWS standpoint. They have their own Trainium chips, and they just launched a whole data center out in Indiana that's all Trainium chips for Anthropic, which they have an investment in. And there's a tie between Microsoft, Anthropic, and Amazon on that front. So I think it's worth paying attention to Amazon. It's worth paying attention to the Trainium chips. And it's worth paying attention to these new offerings for these bespoke LLM models that they're building for clients, apparently $100,000 a year for access to that. So I think those things, that combination of things is worth paying attention to. Microsoft, we're going to move a little bit more quickly now, trying to keep this to 20 minutes. Microsoft, if you look at the numbers here, so the year-to-date returns, 13%, not fantastic. They've had some pullback here as well. People are concerned about, you got some reports about spend on AI for them. And there are multiple. If you look at, 29 times forward, certainly not cheap by any measure. But Microsoft Azure continues to be, a huge behemoth along with AWS and Google in the cloud space. And so I think it's really important to continue to pay attention to what's happening in that space. And then, they're a huge enterprise business, and they have these relationships. And so, excuse me, getting things done at the enterprise level is going to be much easier for them than OpenAI. They have a stake in OpenAI. I do think this is worth paying attention to. It looks like this stake is strained. Again, I mentioned that they had a tie-up with Anthropic, Amazon. And so I think it's interesting to watch and see how, they're pivoting away, I think, from OpenAI and to having more options for their clients. And I think that tie between Anthropic, Amazon, and Microsoft is interesting to talk about that. So, pay attention to what's happening there. Sorry, it's not between Amazon. I meant Nvidia. Excuse me. It's not a tie between the three are Nvidia, Anthropic, and Microsoft. All right. So I think they're still in the game. I think they're worth paying attention to. I think they have taken a little bit of a hit. They bet early. They look like the leader with OpenAI, but I think it's worth, making sure you're paying attention to what's happening at Microsoft. They're certainly trying to reposition themselves. They're still a dominant force. Microsoft Azure is still one of the biggest cloud offerings, so I would continue to pay close attention to them. Apple, we're going to move quickly here into the next couple of mentions here. Apple has sort of lost its way. The person is stepping down, running their AI. They're getting a new person who's coming in. I think that's, worth paying attention to here. They said they're going to start, fixing some of the stuff for Siri and making it smarter. Please do that. I have Apple. Lots of other people do too. But Apple's not out of the game. I think they're very still much in the game. It's one of our largest holdings. I don't lack any confidence in Apple right now. I do think they're behind, but I do think that they have the wherewithal. Tim Cook is a fantastic manager, has been a fantastic CEO. I was a little bit concerned when we talked about Apple, one of our episodes, very concerned about their AI game. Now, by the way, it looks potentially like we mentioned this. Maybe not spending all that money ends up being one of the best ideas, and then they can figure out how they're going to place themselves in this business. Lots of people know Apple, the year-to-date number, 12%, the forward PE, 33 times. I think that's where there's concern that they're still, even without having some really specific AI play here, that they could be potentially overvalued. But the iPhone 17 has been super well received, and they're likely going to have a super big year with that. I think they're very much in the AI game. Continue to pay attention to them. Tesla here, moving on quickly. Robotics and real-world AI, that's autonomous driving, robotics, and the energy piece, and also what we talked about, and more people are talking about this, which is data centers in space. Tesla said they're going to get involved with that. They're going to have their own fab for chips. I think it's very much worth paying attention. Obviously, Elon Musk is a polarizing figure sometimes. The year-to-date number up 11%. Obviously, the valuation is much different than all the other companies that we've talked about. 274 times is the forward. So there's a lot of good news priced into this. Again, not investment advice. But if you look at who's leading, autonomous driving, 14.2 right now out, very good, works. They got robo-taxis in Austin and in the Bay Area in California, San Francisco. Works super well. I think they have it nailed basically. They're going to get it. It's going to get even better if it's not basically done now with 14.2. It's very close. That's the software number for the full self-driving, supervised full self-driving at the moment. So I think they're the leader there. And then the Optimus, I think that is a big deal. And they're making lots of progress there. That's going to be huge, total addressable market, TAM. Everybody's going to want one of those to do the dishes, clean the house, do whatever you need done, get work done. Super important, I think, to be part of that market. And then the other piece is their investments in the energy business. They're building grid scale batteries, and I think that's going to continue to be super important. Their auto bidder software, check that out if you haven't seen it. And then Musk talking about, which also Alphabet talked about, and Amazon has talked about too, data centers in space. I think that is a real thing. That is going to happen. I think Musk will be the first one to get that done because he controls right now. If you've seen the numbers, kilograms to orbit as a percent of total kilograms to orbit, and SpaceX is like 85+% of the total market volume. The other piece is China. And so I think you have to really think about what's happening there. It sounds a little bit like science fiction at the moment, but I think that is going to be a reality. That solves the energy piece. They still have to work on the cooling side. And if you talk about the low latency with the LEO satellites, low Earth orbit, I think that's super important to mention. All right. Last up here, TSM, they build all these chips for these companies. And so they build chips for Nvidia, Alphabet, Microsoft. They have custom chips too. Amazon. So I think it's important to pay close attention to what's happened at TSMC. The year-to-date number there, up 48%. So a lot of people realize that. And certainly the PE 28 times, not cheap. But they're the infrastructure play. The concern is that all of that's in Taiwan, all the high-end 3 nanometer, for example, in Taiwan, but that's coming to the U.S., Texas, Arizona. And I will mention two other names here, which we'll go over just very quickly. And that is Crowdstrike and Palo Alto. I'll just mention them both together. I think on the cybersecurity side, it's important to pay attention to them. We won't do a deep dive, we didn't deep dive into anybody. We won't go heavily into them. But year-to-date, Crowdstrike up 50%. The valuation is high, though, 138 times. Palo Alto up 7%, a little bit different. And they're highly valued as well. 50 times is the forward there. But both of those, I think, are in the pole position for AI and cybersecurity here. So I think it's important to pay attention to those names. All right. So again, we went over Alphabet, Nvidia, Microsoft, Amazon, Crowdstrike, Palo Alto, Apple, Tesla, and Taiwan Semiconductor today. We'll feature this AI episode going forward. So we'll continue to talk about the names that I think are relevant on the AI front. We'll talk about the Chinese names as well in a forthcoming episode. But I think as an analyst, investor, business person, you should be paying attention to what's happening on the AI front. And we're talking about publicly traded companies. So we didn't spend time on OpenAI or Anthropic. They're private companies. But obviously, they're very important frontier models. So pay attention to what's happening here. AI, obviously, is, I think, a transformative feature of what's going to be happening in society and in the markets as well. And so pay attention. But until the next episode, thank you for watching, and we'll see you back on the next episode of Market News with Rodney Lake. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guests and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.